Hi, welcome to my today's show. Today, my point of discussion is a listed player. Very interestingly, I have attended a road show today, the virtual road show of Gulf Oil Lubricants Limited. The management disclosed lots of insight on the company as well as on the industry, and that's why I thought of sharing the same with all of you. Let's begin. But before proceed, I have a declaration that the stock or the stocks mentioned here, discussed here, is no way a buy, sell, or hold recommendation from my side. The discussion is for sharing the knowledge and the insight of the company and the industry. I just wanted to convey the same to all of you. I hope you would understand. So let's begin. Gulf Oil belongs to Hinduja Group, all of you know, and this group has global presence. They are present in geographies like Argentina, Brazil, China, Dubai, India, Japan, Nepal, Philippines, Singapore, and expanding further. So the Gulf Oil has basically 20 blending plants in hundreds of overall 100 countries as per the management. This slide explains the evolution of Gulf Oil, how a small company like Gulf Oil started way back. In 2009, it was somewhere around 8th or ninth in the entire industry, and today uh, it has come up the ladder and now it stands fifth. This industry is basically dominated by oil marketing companies. Okay, so Hindustan Petroleum, Indian Oil Corporation, and Bharat Petroleum Limited. So these three companies together comprises of 35 to 40% share of the market. This these three companies, or let's say these national OMCs, are followed by Castrol and then Gulf Oil Limited. So this journey of Gulf Oil is fabulous. Castrol stood used to stand fourth in 2009, and today also it is fourth. But Gulf Oil was way down the ladder, has come up very interestingly, and now stands just after Castrol. It's fifth largest player in this particular trade at this point of time. So on this regard, let me tell you, I had a recommendation on Gulf Oil some time back, and I got some substantial movement in this particular stock, and I have also recommended to book the profit. My entire position is closed at this point of time. This, as I have tracked the company, so it is under my radar, and whenever I'm getting opportunity, I'm tracking this particular company, and that's why I attended this roadshow, and this was really interesting, and that's why I thought of discussing the same with you. So the most interesting slide in this particular in the entire presentation is this one, what I like the most. Now let me share regarding the industry what is explained in this particular uh, slide. So this industry, this lubricant industry, uh, is basically addressable market size of this lubricant industry is said to be 2900 million kiloliter. Please note, 2900 million kiloliter. Among that, 30% is the share of the process oil, where Gulf Oil is not present at all. 70%, rest 70% is the share of automobile and industrial oils. So this area is a very interesting area where all the players we have discussed or named have a significant presence. Now it is said that current market size of auto and industry together is 2060 million kiloliter. 2060 million kiloliter. Among that, auto contributes 65% at 1310 million kiloliter, and industrial comprises of uh, 30%, 35%, which is 750 million kiloliter. Gulf Oil enjoys a market share of 6 to 7% in the automobile space and 4 to 5%, around 4 to 5% in the industrial space. In the auto market, OEM contributes around 10% volume, while like for Gulf Oil, no, sorry, this is overall for the industry. In the auto market, OEM contributes because this auto comprises of two markets. One is OEM, another one is the replacement market. OEM is the small market, it contributes around 10%, and replacement market is the biggest market, it contributes around 90%. And Gulf Oil, in the OEM space, Gulf Oil's share is around 10%, and in the replacement market, which is the biggest one, here Gulf Oil has a significant 6 to 7% market share. Now when we further break the replacement market down, we found replacement market basically comprises of, one is the retail market. The this retail market, size of the retail market is the biggest among the replacement market. It contributes around 65%, and where Gulf Oil has 6 to 7% market share. Franchisee workshop is the second one. This contributes around 22% of the replacement industry, replacement market, and Gulf Oil has a very significant 11 to 12% market share here. And another one is the fuel stations, petrol pumps. Its its contribution in the replacement industry is around 13%, and Gulf Oil is not at all present in this particular space. So this is the overall structure of the industry. Now, as far as the business model is concerned, around 94% revenue of the company comes from domestic market, and around 6% comes from the export market. Now they are breaking down the domestic market. One is the B2B, another one is the B2C. B2B is basically the the industry industry market. Industry means I'm referring industrial oils market. So and OEM market as well. So in the industry part, means in the industrial oil or industrial lubricant, the company has a very big clientele, as well as in the OEMs also. I will discuss that part separately. So let's see in this particular slide, Mahendra Singh Dhoni is the brand ambassador of the company. Not only Mahendra Singh Dhoni, but Hardik Pandya is also one of the brand ambassador of the company. So now come back to OEMs. In the automotive space, company supplies to Mahindra, Swaraj. Swaraj is the engine manufacturer, then Force Motors, Bajaj, Hyundai, this GM, Ashok Leyland, Tata Motors, Ford, Sonalika International, which is the tractor manufacturer, Piaggio, Kubota. Then Kubota is also, now Kubota is Kubota Export. Kubota Escorts. So apart from that, some other big names in the construction space also from the international and domestic market. Larsen Toubro is the Indian player in this particular space. But Larsen Toubro has well presence in the global space as well. So Ace Action Construction Limited. So all these are very known name and the very prestigious automotive OEMs portfolio of Gulf Oil. Then comes industrial OEMs. In the industrial OEM space, the company has tie up with like very popular companies like Windsor, uh, Dana, Ashok Leyland, acha, for AdBlue I will discuss. For AdBlue, the companies will connected for with Ashok Leyland, the same group company. Then Ford Motors, Fiat, BMW, Mahindra, Truck and Bus, Isuzu, uh, Piaggio, all known names are there in their portfolio. So very interesting. Then comes okay. So very interesting. This slide is which explains, regarding how uh, this shift from traditional ICE engines to EV may impact the performance of the lubricant industry. Now, before moving into that particular space, let's have a discussion on uh, the AdBlue. AdBlue is basically a BS6 compliant lubricant, and this is mandatory for use. Means this category of AdBlue is the brand name, so this category of fluid, or let's say lubricant, is mandatory to be used by you know uh, all the diesel vehicles. So its contribution, this AdBlue's contribution in the entire diesel engine, means diesel oil, is 4%. Like overall, whatever the company in terms of volume is consuming, among that 4% will be AdBlue or its equivalent. Now let me give you a little bit about the background of AdBlue, what AdBlue product is or the brand is. Let me tell you, this is the product of BDA Germany, and Gulf Oil has the license for manufacturing this AdBlue. And AdBlue is a product for BS6 vehicle, as I already mentioned. AdBlue is compulsory fluid in BS6 diesel engines, and in BS6 4% AdBlue is required of diesel requirement, what I have already mentioned. And in the EV part, the company is a pioneer, launched EV fluid, although its contribution is negligible, somewhere around 1 to 2% of its total revenue. But very important, very interesting, how this change or shift will take place. Will the company or the industry be able to survive due to this shift from traditional ICE to that electric vehicles? Now the point is, does electric vehicle require the lubricant? Yes, EVs require some fluid of the lubricant category, but at this point of time, that is at the nascent stage, because EV itself is at the nascent stage, and whatever the demand is there, that demand comes from the OEM market, OEM space only. So there is no replacement market, not at all any replacement market is there for this EV fluids. Uh, and one very interesting thing the management has mentioned, that electric vehicles will consume same quantity of lubricants as ICE engines. So even if the shift happens from the traditional ICE engine to EVs over the period of time, it's very difficult to quantify whether it will be by 2040, 2050, 2070, but overnight nothing is possible. EV is a far reality at this point of time, because the charging infrastructure, battery, all the things are a problem. And as far as battery is concerned, we don't know, like whether it will be lithium ion battery or something else, because lots of research has been going on, or something else will come up. Sodium ion battery is also not far away. So, or maybe a combination of all this kind of battery. And as far as battery is concerned, no one knows like how this battery will be managed, because battery management system BMS is also an interesting area which is yet to be finalized. Means how India will manage its battery. Means because this battery will consume the most of the weight of a PV. So naturally, in an EV PV, what will happen? Like one concept was floating around that there will be a battery shuffling. Means once a car will come for recharge, what will happen, the existing battery will be replaced by a new one. Means not a new one, the charged one. I have left the older one and took a charged one. So whatever I will be leaving, that will be charged and will made ready, and once the next vehicle will come, it will be supplied to them. But the biggest challenge is its weight. So its handling will not be easy. So that is again not very clear, means how it will be managed. So battery management system is still under dilemma. And as far as electric vehicle charging system, again charging infrastructure in a country like India itself is a big challenge. So we are at the very nascent stage, and this changeover will not be possible overnight. So now the point is, if the change happens over the period of time, if 30% of the vehicle four wheelers converted, I'm referring PVs, I'm not referring at all commercial vehicle. As far as like so far whatever it looks like, uh, means conversion of a commercial vehicle looks far a reality. uh, Very difficult to we are too early to make a comment that CV, means commercial vehicle, will be converted into EVs. Although like Jupiter, we have already discussed that Jupiter wagon launched, or let's say about to launch their vehicle, EV vehicle, which is commercial vehicle. But again, its success story, how much successful it will be, it's very difficult. Even management of Jupiter, I have spoken to them at least twice regarding this. They could not give any roadmap at all. So everything will happen, but today it's very difficult to quantify any timeline, how long will it take. But as government was saying, giving some timeline and all, that kind of preparedness is not there in the country, in the infrastructure of the country. And considering the huge size, vast number of vehicles on the road and huge population, it's not that easy that overnight or over the period of certain point of time, let's say 5 years, 10 years, it's very difficult, too early to make a comment. So my point of, again, let's come back to the point of discussion. So very interesting is EV fluid is something like whatever management, battery management system, whatever charging infrastructure comes, but this EV will require this lubricants. So lubricants will not be lost. It will be a change from ICE kind of lubricant to EV fluids. But again, although the company is a pioneer, but it's at the very nascent stage, and its contribution is almost nothing. But the good thing is company is well poised to take the opportunity. So if this transition happens over the period of time, I believe the company also will be able to increase its contribution based on the demand. So capacity is not a constraint for the company. Constraint because everything is brownfield possible. Company has 2 plants operating. So capacity will not be a problem is the demand side. So once demand will increase, company can increase its manufacturing capacity of the CV fluid. And if any change happens, if IC's contribution gradually goes down over the period of time, and EV's contribution gradually goes up, then what will happen that this companies, I believe, will poised to gradually take the shift. Okay, so this is very important. Now, what I was intended to discuss about this particular slide. Uh, Basically, this commercial vehicle, uh, as far as EV penetration is concerned, this commercial vehicle has currently plighting around 43% on Indian road. 43% are commercial vehicle. Uh, Sorry, this 43% of the contribution of the lubricants goes to commercial vehicles. 21% goes to industry. 15% is greases and gear oils, coolants, etc. And 13% is this bikes and scooters, mopeds, all this kind of all this category. And So these are the major contributors basically. Now the point is, what the management explained, CV is far future. Means conversion of CV to EVs are far future. So there is no point discussing this one. Industrial will remain intact. There is nothing change, like no shift, no change is likely in this particular space. Greece is a different domain. It will remain as it is. Only a area which can be impacted, that is this this two wheelers section. But the point is, this two wheeler space, uh, its contribution is less, number one, 13%. And again, this 13% will not be lost within any uh, foreseeable given period, like entire 13% will go away, means entire two wheeler ICE based two wheeler will wiped out. It is not going to happen in a visible time period, not between 2030, not between 2035. We don't know. Maybe some 30%, 40% conversion target may be given by the government, but it's too early to comment. Okay. The next point is like this, like this is a very interesting point the management mentioned regarding this two-wheeler space. Even if 30% is converted, gets converted to EVs, so 30% of the share will go away, right? So rest will remain as it is. Only out of the 13%, 30% will go away. But the thing is, uh, the rate of growth of the industry is huge. Uh, some data point says it will be more than doubled in upcoming to 6 7 years, 6 years. So and if 30% of the this 13% is lost, and if this 13% starts if the in the absolute term, this 13% contribution keeps on growing from 16 million to 25 million. So if it is even 1.5 times on a conservative basis I'm referring, if it is 1.5 times, so 30% loss of 13% will be easily compensated by absolute increase in the space. So this math seems that lubricant has nothing to lose. So this is something which is very interesting point which has been mentioned by the management. Acha. So apart from that, another a few very interesting points. The company plays an important role in the electric vehicle value chains, as like there are three acquisitions the company made, and all these acquisitions are in the entire value chain of EV charging, EV charger, EV battery. So in this particular fuel and energy space, the company is gradually increasing its presence. So if let's say if the conversion from ICE to EV happens gradually, the company is number one gradually is well poised to gradually increase its uh, increase its capacity and supply of EV fluids to capture the EV market. So this is one. And second thing, as far as charging infrastructures are concerned, the company has already invested in three different startups or three different companies. uh, so the company, this Gulf Oil, is well poised to take that opportunity also. So uh, whatever they have invested, those are in the charging infrastructure, that manufacturing companies of the charging infrastructure. So once EV will gradually increase, uh, it will be benefited from these investments, as well as in terms of the EV fluids being a pioneer or the first mover, or let's say early mover. So, as far as raw material policy is concerned, you all know that base oil is the key raw material, which is the derivative of crude and closely related to crude. So, once last con call, or last to last con call, while before my recommendation, when I have spoken to them for getting inside, then the management told that 85 US dollar is their uh, upper level, comfort zone. Means beyond USD 85 per barrel of crude prices, uh, means becomes unfavorable for them. Little here and there is acceptable. For quite long or very high prices are like a challenge for the company, hits its margin. So 60 to 70% of the base oil, which is the key raw material, is imported mainly from South Korean refinery, but they have also tie up with other refineries throughout the world. And for this raw material base oil, indices based price, for this raw material, means base oil, I'm referring base oil, one base oil indices based pricing formula is applicable for the company. So on that basis, company keeps on purchasing the raw material. And also last time the management said, means last to last con call before recommending, while I have spoken to them, they said like there is around 1 to 1.5 month of lag effect in the like with the crude prices in the company, or let's say in the raw material prices of the company. So what happens, it impacts the margin if base oil prices goes up. uh, Additive is another one important item for them, and very interestingly, around means at least as per the policy of the company, at least 50% of the raw material must be hedged. So it can go up even 70% based on the advice given by the advisors, by their advisors. They have a guided EBITDA margin of 12 to 14%. So current EBITDA margin is around 11%, guided EBITDA margin is 12 to 14%. Now how this EBITDA margin can be achieved? Let me tell you the story. Earlier, means around 2016, 2017, they used to enjoy 14 to 16%, 14-15% of, you know, EBITDA margin. But afterwards the margin shrank once like crude oil prices went up. Afterwards their margin was impacted. So if now if crude prices fall sharply, then what will happen? Whatever price hike they have taken, so that will be rolled back. But the management said, in case of any major correction, the entire benefit is not basically passed on. So entire price hike is not basically rolled back. Basically, the management said they have taken 6 price hikes in last 18 months. So whatever like if crude comes back, be like whatever it was 18 months or 24 months back at that level, it does not mean that entire six price hike, whatever price has been increased by the management in this period of time, will entirely be rolled back. Not at all. A little bit will be retained back, and that retention will help them to increase their margin. So in that way they are anticipating the like over this period, over the period of time, maybe down the line in another 1 2 years, obviously crude will come down up to a certain extent. This is my assumption, what management is taking is considering. So if it happens, then this margin improvement will happen. And again like this EV fluid and new products, some of the products are very that is called like margin accretive. So this will improve margin, and like their presence in the mix or the product mix is very important here. But as far as AdBlue is concerned, AdBlue has a very beautiful response in the market, but AdBlue is basically a low margin high volume product. And as far as BS6 like usage of AdBlue is mandatory in BS6, so volume is gradual, like every quarter they are reporting better volume of AdBlues, and overall volume improvement has also been witnessed. So overall the company has been so continuously doing good. And their valuation wise, this company was also cheap enough, but recent past valuation I'm not aware of, because I was tracking the company, and we have just I recommended to book profit. So anyways so this was all, I think, from my end regarding this particular roadshow, whatever the management has revealed. So this obviously will provide you some food for thought, specifically in terms of the gradual shift, what I was intended to convey you, the gradual shift, and how will this companies will poised, and how the entire industry will play out over the period of time, the battery, the charging infrastructure, as well as this lubricant industry. So anyways this is all for the day. And very interestingly, very importantly, this company has done phenomenally well in last few quarters. Every quarter they came up with better result, all time highest revenue. This type of reporting has happened continuously. So okay, anyways but it's not a buy sell recommendation, buy sell hold recommendation from my end at this point of time, and at this price also. So if you have any interest in this particular company, check with your registered advisor. So that was it from my side. I hope you have enjoyed this video, and please keep on watching my upcoming videos. You will get lots of food for thought. Thank you, and don't forget to subscribe my channel. Thank you very much.